So I think you got to put two things in mind here. Currently, right now, the U.S. economy is actually still doing well. Consumers have money, fiscal stimulus, they still have more than they had before. They're spending 10% more than last year, 35% more than pre-COVID. Their balance sheets are in great shape. Yes, debt's gone up a little bit, but not nearly to pre-COVID levels. And therefore, even if we go into recession, they're going to be in much better shape than 08 and 09. Companies are in good shape. Credit's very good. Markets are still open, though rocky and stuff like that. But you can't talk about the economy without talking about the stuff in the future. And this is serious stuff, okay? This is inflation, which obviously is changing the effect of those numbers I just told you about. It's rates going up more than people expected already, and probably a little bit more from here. It's QT, which we've never had before. So therefore, the unknown effects, and you see it today in bond markets around the world and sovereign markets and people selling U.S. Treasury debt, and it's the war. And these are very, very serious things, which I think are likely to push the U.S. And the world. I mean, Europe is already in a recession, and they're likely to put U.S. in some kind of recession 6-9 months from now.
If we do see the U.S. go into recession, how severe do you expect it to be, and how long do you expect it could last?
Yeah, well, this is the thing no one ever really knows, right? You do have a strong consumer going into it. Businesses are in pretty good shape, but they were amazingly resilient during COVID. Even the ones that had no government support and stuff like that. And I think governments did do a hell of a job getting their thing to recover. So we don't know. I mean, now you have to look at the range of outcomes. It can go from very mild to quite hard, and a lot will rely on what happens to this war. Mm-hmm. So I think to guess is hard. Be prepared. But the one guarantee, which we've been consistent about, is volatile markets. You're going to have volatile markets. You've already seen markets down quite a bit, no IPOs, very little high yield, bridge loans being hung and stuff like that, which is pretty typical, but it's still been orderly. I think it's possible you're going to see it be disorderly sometime in not too near future.
How do you think the Fed is doing in managing this whole situation?
Well, let me give them credit for what they did in COVID. And I hate to second guess people because I think it's easy for everyone to do. In hindsight, they waited too long and did too little, and QT should have started soon and all that. But they're clearly catching up. They're clearly motivated to catch up. And from here, let's all wish them success and keep our fingers crossed that they manage to slow down the economy enough that it doesn't, to cause whatever it is mild. And it's possible. I wouldn't take that off. I think, like I said, the far more serious thing is this war. Far more serious than the short-term effect of the economy and things like that.
In the middle of the pandemic, I remember you joining us and talking about the possibility of a runaway inflation. And one of the things you talked about then was a hedge around using crypto and Bitcoin. And your friend Stan Druckenmiller had bought some Bitcoin at the time, too. Stan Druckenmiller recently had an interview with Joe Kernan at Delivering Alpha, said he's out of Bitcoin. Where are you?
I've still got a very minor allocation. I've always had a small allocation to it. I think.
Welcome to the Crypto Teacher. And I come back with that video just to make you think. And we have Jamie Dimon on the economy. And we know he's only going to give us some of the truth. America is going into a recession in about 6 to 9 months. We know we're already in a recession right along with Europe and the rest of the global economy. Yes, the dollar is strong, so it's setting up an illusion. But we have the Fed is going to allow these rates to stay up. And next year, they're going to start shrinking this balance sheet. Remember, guys, they're going to destroy this legacy market in order to give the fourth industrial revolution rise. Remember, the NWO calls the problem. Wait for the reaction and run in with the solution. And what is the solution? The fourth industrial revolution, where the robots, algorithms, and drones take over the economy, pay each other with crypto, and the sheep go inside the metaverse and get that free money airdrop. And we have Paul Tudor Jones saying the same thing as Jamie Dimon. There's going to be rough times ahead. And we know in 2023 and 24, we're going to have mass layoffs due to automation. And Jamie Dimon and Paul Tudor are not going to talk about the fourth industrial revolution. They're not going to tell you that the machines are coming to get your jobs. They're not telling you that the sheep are going to go inside the metaverse, the virtual world. Guys, when it comes to these billionaires, we don't listen to everything they say. What do I teach you? We follow the money. And remember, the Crypto Teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
Markets of this economy, we see these hot employment numbers coming in. We're trying to understand what the Federal Reserve is going to do. We're seeing what's happening in Europe. We have the issues in Ukraine and Russia and some of the comments by President Putin. I want to put it all into the mix as a macro trader, and you're going to be doing a master class, we should say, about macro trading coming up on Wednesday. What is your take on what's happening in this economy, in this market right now?
Well, these are spectacular times for macro. And great times for macro are typically not good times for general investment, owning stocks, owning bonds. Macro works when everything is broken a bit. That's when you have the most volatility, when it's really best for the type of trading that I do. So for me, it's
bad
fantastic.
Times are good times.
Bad times, good times for me are bad times for general investors. And if you think about where we are right now, the Federal Reserve Board is fighting something it hasn't seen really in almost 4 decades, which is inflation. And inflation's, it's a bit like toothpaste. Once you get it out of the tube, it's hard to get it back in, right? And so the Fed is furiously right now trying to wash that taste out of their mouth, and they're doing it by raising interest rates. And of course, there's a big calibration question here. Just how much are they going to raise them? How much do they have to raise them? And what's the consequence of that? And typically, for when you have an extreme event like inflation we have right now, the only way to get it back in the tube is to raise interest rates to a level. Powell's already talked about pain. I take that as a metaphor for a recession. And if we go into recession, that has really negative consequences for a variety of assets. You know, if you think about every decade, the 70s were the decade of inflation. The 80s was a decade of kind of boom-bust, huge swings in dollar volatility. The 90s was equitization, the dot-com bubble. The aughts was the mortgage bubble and the great financial crisis. The teens were the peak of globalization and probably the peak of central bank experimentation with monetary policy, right? The 20s, I'm afraid, are going to be that period where we really focus on debt dynamics country by country, fiscal deficits, and the need to run certainly fiscal policy in a way that gives people confidence in the long-run value of the currency. And the problem that we've had really for the last 12 years is that we've done this massive experimentation with monetary policy where we suppressed yields, and we did this massive experimentation on the fiscal side during the pandemic. And so my guess is the 20s are going to be just the opposite of both. We're already seeing that right now from the central bank. Whoever is the president in 24 is going to be dealing with debt dynamics that are so dire. And so
so dire that this is the 1970s?
No, so dire that we're going to have fiscal retrenchment. And that fiscal retrenchment means that if we don't have fiscal retrenchment, that everything that we spent, if you think about the teens, which was all about suppressing yields, right? Mm-hmm. I think the 20s will be just the opposite. I mean, higher term premiums in bond markets, higher term premiums in stock markets. It'll be just the opposite of what we experienced the last decade. So in a time when there's too much money, which is why we have inflation, and too much fiscal spending, something like crypto, specifically Bitcoin and Ethereum, where there's a finite amount of that will have value at some point, someday. I don't know when that will be, but it will have value. That scarcity.
And the value at a much higher number than where we are today.
Oh, I think so, yeah.
Like?
I would think, so we're probably getting ready to go through the recession playbook, more likely than not. Sometime, I don't know whether it started now or whether it started 2 months ago. You always find out, and you're always surprised about when recession officially starts. But I'm assuming we're going to go into one. There's a specific playbook around that. And
what is that playbook?
well, so that playbook is most recessions last about 300 days from the commencement of it. The stock market's down, say, 10%. The first thing that will happen will be short rates will stop going up and will start going down before the stock market actually bottoms. So that's why you could argue that two-year rates here may have some value, or somewhere through here. And term premium gets put back into a variety of assets, into bond markets, into stock markets, and that's obviously what's happening. So you're seeing multiples compress in the stock market, as they should, and you're starting to see bond markets sell off because, again, term premiums being put back into them. So I would say when we get into that recession, there will be a point when the Fed stops hiking. There will be a point when it starts to either slow down or even at some point it'll reverse those cuts. And when that happens, you'll probably have a massive rally in a variety of beaten down inflation trades, including crypto.
I want to bring Becky into the conversation because she's got a question, but when do you expect that to happen?
Well, look, we've got rates at unemployment rates at 3.6%, I believe. It's very possible we haven't even started yet. It's very possible that when the NBR goes back and says, here's when the recession officially started, that it'll be somewhere within a month or two of now. Maybe, I doubt, again, with the unemployment rate so low that they would date it earlier than this. They look at 6 or 7 different measures, and you're always surprised ex post when they do.
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see the 4th Industrial Revolution, foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. From COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.